Hello, everyone, and thank you for tuning in to the update with Oakwood Financial Group. I'm Joshua Dobi. Appreciate so much your willingness to engage this medium continuously, certainly this year of 2020, as we are now looking at the calendar finish line, has been a unique one, and I really do appreciate, again, your willingness to engage in this way. Want to be respectful of your time as always. Let's go ahead and dive right in. I'm going to make this update a little bit shorter because I'm planning to send you out another one between Christmas and New Year's, especially if we have some legislation which comes through Congress. I'll talk about that here in a few minutes. But I want to talk about some macroeconomic factors, and certainly relative to market performance, the kinds of things that we have seen here over the last several of weeks. Frankly, I've been surprised at the performance that we have had since Election Day. We have seen not only some sustainability since Election Day, but even a little bit of a broadening as far as what we call market breadth in the marketplace, meaning that the number of companies that have turned around and are performing better has broadened. The number of companies has increased, and so that has been encouraging to see. Frankly, I'm not sure about how sustainable that is relative to other macroeconomic factors, especially when we look at unnaturally low interest rates, unbelievably low inflation, and commodity prices, which are very reasonable. So I'm not sure about how long that's going to be able to sustain, but relative to market performance, and as they're noted by the most popular indexes, it has been encouraging to see that. Now, if you have listened to any of my previous updates before this one, you know that I don't get too excited about where index performance is, especially in a year like this one, when it's just been a very few number of companies which have had, in my terms, unnatural influence over the index as a whole. For example, if you would take out in the S&P 500 index the top 11 companies, you would have negative performance for the market overall in the double digits. And it may have fluctuated some since the time of this recording, but as of the time of this recording, that was indeed the case. I say that not to frighten you in any ways, but rather to give you some perspective on how this market continues to perform. That's why the movements that we saw following Election Day were somewhat encouraging, because I didn't anticipate that that was going to be the case. We still have the opportunity for a technical correction out there, and you've heard me say that a number of times. And I'm sure some of you are thinking, well, at a certain point, you're going to be right if you just keep talking about it long enough. And yes, that indeed is the case. However, again, with the most popular and where the largest number of dollars have gone into the market in this past year, we are due for some kind of breather and for some kind of pullback. So when will that happen? Will it be today? Will it be this week, this month? Sometime over the next several months? I don't know. But certainly from a technical analysis standpoint, we know that we're due for that. So stay tuned. I mean, don't get unnaturally concerned, but also make sure that you don't unnaturally make moves in the short run that may not benefit you in the long run as well. Very, very important that you keep that in mind relative to your individual plan. All right, we took a look at market performance. How about this legislation that I mentioned? And I apologize, I've rung this bell several times over these last several updates that I've given you here. It still hasn't happened yet. Frankly, once we got to Election Day, I thought they were just going to push until January 20th, until Inauguration Day, and that there wouldn't be anything that would happen ahead of time. Again, surprising to me, even having watched this for more than a quarter of a century now, but surprising to me, there was a reinvigoration of the process. And we actually have had more conversation here in the last week to 10 days than we've had in the last 2 to 3 months. And so we may indeed have some level of legislation which moves through Congress before the year end. Now, I also need to let you know, if you don't watch maybe Washington as closely as we do here, just for economic and financial issues, it looks like the primary motivation for that is the fact that there needs to be a spending bill, which is moved through Congress before that time, which has to fund all of our federal government agencies and programs. So it's not just the aspect of the COVID-19 related financial relief bill, but it looks like they're going to pair the two together and try to move those through Congress at the same time. Stay tuned. As soon as we get that voluminous amount of data, and I anticipate that it's going to be voluminous, hopefully not the 900 pages that we had for the CARES Act earlier this year, but I anticipate that it's going to be a pretty thick book. As soon as we have that there, we're going to pour through it. We're probably going to do a couple of updates just to bring you up to speed on several of the factors and several of the programs which are a part of it. It looks like we're going to get, at this point, that we're going to get some kind of additional bump up in unemployment insurance. It looks like some of the Small Business Association programs are going to be refunded, and perhaps even some new opportunities as well. But we're just going to have to see once we get into it in terms of what actually transpires, because there's a lot of horse trading going on right now, unfortunately, and we're going to have to see what actually makes it through the entire process before we bring it to you. But stay tuned. We certainly will do that as it happens. Which really brings me to the public health aspect of things and why these programs are so important. You've heard me say any number of times, I am by no means a medical expert, a public health expert, or anything even remotely close to that. But what we can do, and which we're doing all of the time here at Oakwood, is taking a look at the raw data figures insofar as the continued spread of COVID-19 in terms of infections and in hospitalizations. And I'm not saying this to alarm, because I don't believe there's any reason to be alarmed, but we are seeing a move up in terms of the numbers from what we had here just a couple of weeks ago. And this was largely anticipated after the Thanksgiving holiday, because of the way that folks were traveling, that we would have some increases in these numbers. I say that to say, again, not because I'm a public health or medical expert at all, but I say that to say that that probably is going to have some impact, obviously, on folks who are going to need to quarantine, and perhaps folks who are going to need to stay away from their jobs, perhaps folks who are going to need to return, or maybe for the first time be added to the unemployment rolls. So a lot of factors that go into that, obviously, from a financial and economic standpoint. So we are watching those numbers closely, and that's why I think that there is some concert in the fact that as those numbers are going up, that unfortunately, that is motivating Congress to take some action. So we're watching those figures as well. Obviously, as those kinds of figures impact our most vulnerable industries, those industries which have been hit the hardest, unfortunately, since March: hospitality, restaurants, sports and entertainment, airline industries, resorts, cruise lines. Unfortunately, it looks like those are the folks who are going to be hit the hardest again. So those programs that were able to float, many of those companies since that time look like they're going to be refunded because of what looks like maybe another drawback, and we're starting to see that in several of the states around the country. So we'll bring you that data as we have it, but I certainly want to mention that here as well. Let me take just a couple of moments here, again, during this week's update with Oakwood, to talk about some of the year-end things, because ready or not, we've blown through the Thanksgiving holiday and we are rapidly approaching the Christmas holiday, different though it may be for so many of us. But a couple of the things to keep in mind. First of all, you want to make sure that as far as charitable contributions are concerned, if you have some that you haven't made yet, you need to get those finished and in hand by the charitable entity by December 31st. So you want to make sure that that's in place. Sometimes if you can get it in the mail and get a postmark of December 31st, that'll work as well, but you need to check to make sure with that particular charitable entity to make sure that that's also going to be acceptable for them. Another thing that you may want to think about as well, offsetting some capital losses and capital gains. Now, for many of you, you've had some great capital gains and you have some huge embedded capital gains, so that you really don't have opportunity to take capital losses. That's a great thing, that you don't have that opportunity to do that. But if you do, perhaps in other parts of your portfolio, have some opportunities to offset some of your capital losses and capital gains, that can be a great way to mitigate some future tax liability. So something you want to keep in mind perhaps here for the end of the year. Well, friends, as I mentioned, I'm going to be probably jumping back on another video update with you, probably in between Christmas and New Year's. I know, just the kind of thing that you'd like during the holiday season to hear from us, but just to touch base with you before the end of the year. So I'm going to draw this particular update to a close. Thank you so much. We are so very thankful for you here at Oakwood. We're thankful for your trust and confidence and the ways in which that you have entrusted us to manage some things which we know are literally foundational to your long-term financial security. We don't take that lightly. We know you have a lot of choices out there, and the fact that you've chosen us, again, we take that in very high regard. Never, ever hesitate to reach out to us. If you'd like just to chat about things, to chat about where the markets are, the year-end kind of things, I'm always happy to do that. If you'd also like to talk about the fact that the Steelers no longer have an undefeated season, I know, we were a little weak going against the Washington football team there. That's all right. It takes the pressure off. Once we get to the playoffs, they don't have to have the pressure of an undefeated season also on their plate there as well. But if you'd like to talk about Steelers, if you'd like to talk about what's going to be an abbreviated hockey and NBA season coming up as well, very, very interesting to watch how that's taking its shape. Or if you'd like to talk about Christmas cookies, and I love Christmas cookies, I'm always happy to talk about that as well. All joking aside, friends, truly, we are very thankful for each of you, especially reminded of that during this holiday season. Until the next time, I'll look forward to talking with you soon.